Okay guys, welcome back to the channel. My name is Vandell, co-founder of Black Swan Capitalists. So in this video, I just need to explain something. There is a huge misconception about whether we're in a bear market, a bull run. Is the bull run not coming? Is it over? What's happening? A lot of confusion out there. So I'm just gonna explain it in simple terms, simple, easy to understand English. So first of all, you got to understand, for over a decade, ladies and gentlemen, we have had the 4-year crypto cycles, and that's pretty much been the backbone of crypto investing for most crypto investors and enthusiasts. And it's a pattern that's so precise, like clockwork. You get the bear market, accumulation phase, expansion, and then you have this euphoric bull run, which is the top of the bull run, and then the cycle resets. Very predictable, almost too predictable. Now, here's the thing. There are a lot of people out there saying that the 4-year cycle is dead, that the legendary cycles are 100% over, that the old rules don't apply anymore, that institutional money, macro shifts, and regulations have completely changed the game and pretty much thrown off the rhythm of the standard historical 4-year cycle. And around now, probably online, on Twitter, on X, on social media, you've probably seen a bunch of posts, and people saying and claiming that this anticipated bull run that we've all been waiting for is over. That's what people are saying now. And it's funny because who's pushing these narratives and saying that? It's actually the same people who just a few months ago were confidently predicting Bitcoin to hit 250,000, saying it's going to 1 million, and the same, experts that were saying the biggest bull run ever is coming. And these are the same people that did a 180. The mainstream talking heads, the notable figures and influencers, these are the same people that were saying the best is yet to come and now it's over. Well, guess what? They're all wrong. And I'll tell you the truth. Is the 4-year cycle really dead? And maybe are we just too zoomed in to actually see the bigger picture? And the answer to, is the 4-year cycle dead? The answer is no. Are we too zoomed in looking at the micro details that are irrelevant in the grand scheme of things? Yes. So I'll tell you right now, the cycles are not dead. The answer is no. The cycle hasn't broken. It's just evolving. And once I break this down, you'll completely understand how liquidity moves through global markets so that you could see exactly why history is actually repeating itself. And yet again, even though we are in somewhat uncharted territory, I will acknowledge that, you'll still see how history is repeating itself, and you'll better understand exactly where we're headed next and why, most importantly, we are still in a bull market and the top has not come yet. So let's just get right into it. First of all, let's start with the foundation here. This is the most crucial thing to understand so that you really see how this makes sense and why we are still in a bull market. So the first thing you need to understand is what drives crypto. Okay, it's funny because 90% of crypto enthusiasts and people invested in this space don't even understand what drives crypto. So let's establish a fundamental basic truth here. Crypto in general, particularly Bitcoin, is a macro asset, okay? This is not an opinion, this is a fact, because it's deeply tied with the global liquidity and debt markets. This is right in front of us. So this is where most investors miss the big picture, because liquidity cycles drive markets. And if you understand how they work together and why they coincide, this will make more sense. So if you understand liquidity cycles, you have a huge competitive advantage that the majority of people in this space simply do not have. And it's unfortunate, but that's what they know, research, white papers, technological stuff. That's irrelevant as an investor in the grand scheme of these cycles. So crypto is tied to the debt markets, and what does that mean exactly? Because crypto has the strongest correlation to global liquidity and money printing cycles, even more than stocks, more than real estate, and even more than gold. So when global M2 money supply expands, which means when it increases, crypto soars. That's a fact. When liquidity and global M2 liquidity contracts, which means shrinks, comes down, crypto crashes. That's a fact, like clockwork. It's been like that for over 9 years. Now, this relationship has been 100% consistent, and it hasn't changed yet. And a side note is that the global M2 growth actually leads asset prices, particularly crypto, by approximately 10 weeks, 8 to 10 weeks. So it's ahead, and then you see it later in the crypto markets. That means it takes about 10 weeks on average before that liquidity and money actually flows and makes its way into the crypto markets, into these other crypto altcoins and digital assets. Because it takes time to make its way to the corporations, financial institutions, into the economy, and then it goes into the crypto markets. So it's a flow and there's a sequence. So if you know what to watch, then you can actually see the next move before it happens. You just don't know when, but you know what's coming. And that's why I emphasize it's important to know where we are in the cycle, what's happening with the macro factors. Now, why isn't this changing now? I'll explain. Because since 2009, the debt has had to be refinanced every 4 years on average. And it happens to be that the bulk of the treasury debt is due for refinancing this year in 2025. So they'll likely do rate cuts at some point. They'll come up with a good excuse for it. They'll print more money. They'll expand liquidity into the system. And why rate cuts? Why would they do that, even if they said they wouldn't? It's because it would be more affordable for the government to refinance their debt, their interest, at lower interest rates as opposed to higher ones. So they will print money, and to do it, they don't have the money on hand. They have to print it out of thin air. So they're going to have to come up with the money to refinance the debt and pay the previous interest. So they'll borrow it into thin air. That's credit creation, money creation. Now, most people don't realize this, but if you understand how the liquidity cycles impact assets and asset prices, then you basically have a cheat code that almost 99% of investors don't have. Even traditional general market investors don't understand this stuff. It's like a combination of economics and macro data all put together, and then you combine it with the crypto cycles. So as long as debt refinance cycles exist, which they do, crypto cycles will persist. It's as simple as that. But why? Because crypto is directly tied to the broader debt markets. The two move in tandem. This is not conspiracy. This is real. This is why the 4-year cycle isn't just alive. It's a structural inevitability because it moves with the debt markets. So when the debt markets operate on cycles, which they do, liquidity expands and contracts in waves. They're cycles. Everything is cyclical. And crypto, as a liquidity sensitive asset, which means it has a strong correlation to the global money supply, it moves accordingly. So if you get this, then you understand why the 4-year cycle is a very reliable framework. But we also have to look at the macro data because events happen in sequences. And if you know what's happening now, then you can know what comes next, not necessarily when. It's like a compass to navigate the markets. Now, the second thing, regardless of who gets elected, all these headlines you see, now Trump is in office, That was irrelevant to begin with because money supply always expands over time. You could see it throughout history. Whoever was elected, it didn't matter. And it just expands over time because that's how the debt-based system works. And that's how it was designed from its inception. And it has not changed yet. It probably will in the future. But the financial system is a debt-based system, meaning new debt and by extension new dollars must continuously be created and put into the system in order to sustain the system from collapsing. New debt, credit creation, or new dollars, if they are not created, the system will collapse on its own weight. It's as simple as that. That's really basic economics with the financial system. And if it collapses in its own weight, we would default, of course, and have even more serious issues. So this isn't speculation. This is economics 101, and it's a fundamental economic reality. This is how the system works. So they always have to expand the debt, and they always have to keep debasing the currency. And that means money printing and credit creation, and that means crypto and asset prices go up. So your question, why haven't we seen altcoin season yet, or an explosive bull run? That brings us to the question that's on everybody's mind. Why haven't we seen that kind of parabolic bull run that people are waiting for, that have been waiting for? The altcoin season that we constantly speak about, or Bitcoin reaching new all-time highs, crypto prices reaching new all-time highs. Why hasn't that happened? The answer is because today's market is driven by liquidity flows, as it always has been. And those flows haven't fully returned to the crypto market yet. While Bitcoin has rallied, of course, and crypto has pumped, leading up to Trump's election, crypto did pump. And the real driver, which is global M2 money supply, the M2 money expansion hasn't even taken place yet. Instead, what we saw so far is a crypto market pumping and pumping based on nothing, just flows from ETF inflows, political positive sentiment, and short-term hype. That's all we saw. And that pumped the market. That's it. But the kind of liquidity event that historically triggers a true altcoin season and bull run hasn't even occurred yet. So logically, be logical. Ask yourself, if crypto has rallied this far without any meaningful increase in what really drives it, which is the global liquidity, which is the main driver that drives bull runs, what do you think happens when the global liquidity actually increases, expands exponentially, and returns and flows its way into the crypto market? What do you think is going to happen? Remember, there's a lag time. It takes time for these things to happen. Exactly. Well, that will be your bull run. But now you're probably thinking, okay, well, why hasn't a substantial increase in liquidity come and entered the market just yet? Why? And I'll explain. Here's how the economy works. Here's what people aren't considering, and I'll explain it simply. The major liquidity injections don't come into the market from the central banks during market strength, okay? They come after economic downturns, recessions, credit events, systematic market stress, or tight financial conditions and weakness in the economy. That's when the money starts coming in from the central banks. Once we have weakness in the economy and it's visible in the economic data, central banks get that weak economic data, and that's when central banks are forced to step in and act and send a recovery and send the markets up. They can't just inject liquidity preemptively, okay? That's not how it works. They have to wait until the conditions in the economy demand it. So you see, the US fiscal landscape has shifted ever since Trump came into office. So with the administration, been publicly saying and aiming and have been doing cutting government spending, we can expect lower employment, which is happening. GDP would draw down and inflation would draw down. The Fed is basically allowing pressure to ease and come down, and they're setting the stage for them to intervene and come in. But first, they need to see visible weakness in the economy and in the data. And once they step in, stimulus, they print money, risk on assets, especially crypto, will benefit significantly, and you're going to see asset prices soar once again. And I'm very well aware, the economy, the system's collapsing. It's in slow motion, I know, but we're not there yet. When that moment arrives, when central banks worldwide collude together and they pivot towards stimulus and they decide that, okay, this is the next step, they step into the expansion phase. That's when global M2 money supply increases and the cycle begins again. When we see the real movement in crypto markets will be after that happens. So we're still in a bull market as we speak, and the best is actually yet to come. We just need the macro factors to unfold, because it's like a pressure valve they have. They apply the pressure, it gets heated up, they take it off. It cools down, they apply the pressure, and that's how cycles work. The macro factors are the key to unlocking the next phase of the entire crypto cycle. So we have to watch the macro data, and that's what I'm trying to explain. Central banks are watching every data point very closely, okay? They're paying attention to everything. They're waiting for the right moment to step in and stimulate. But right now, liquidity cycles haven't topped out yet, okay? You can see this, anybody can look at it. We're still in the middle or near the bottom. But what exactly is a liquidity cycle anyway? It's basically the creation of available debt and just money printing that fuels and drives the economic expansion in the economy. So banks are obviously incentivized to create debt through government policies and actions, which in turn basically push money through the economy. And this is why we have to look at the macro data and not just the 4-year Bitcoin halving cycle, even though they coincide together. The Bitcoin halving is not enough, okay? The fiscal landscape has shifted because of this new administration here. Now, basically, in simple terms, what they want to do is they're drawing things down. They want the economy to cool off. They want things to pull back, draw down the stock market, suppress optimism, keeping sentiment, negative, uncertain. So people are sitting on the sidelines, investors are waiting, and even cutting government spending is what, Doge is doing and all these characters. So this brings down employment, and when you slow GDP growth down, that temporarily lowers inflation, that creates the perfect setup for basically what comes next. And this will happen this year, so likely. Tax cuts, deregulation of banks, other pro-market policies. But the fact is, these measures, once things cool down, the Fed gets the data, these measures will incentivize credit creation and money printing, okay? This would be the next step, leading to, obviously, currency debasement, which in turn drives asset prices much higher. So the Fed is deliberately cooling off the economy, easing the pressure, and basically providing themselves with the cover they need so that they can step in and stimulate with heavy firepower. Okay, they need that room. So, in other words, think of it like, as I said earlier, a pressure valve. They apply it the economy starts overheating, central banks ease off the gas to cool things down, and once conditions kind of, you know, get low and kind of float around and get to their desired level, that's when they step back in and apply the pressure again, fueling basically the next leg up of the cycle. And that's basically what we're seeing right now. We're in the stage where they're letting things cool down. The more they draw down the stock market, the more they weaken the economy, the more room they have to come in with more stimulus and heavy firepower, which will, of course, debase the currency and send asset prices back up. So clearly, in simple terms, this is not a bear market. This is not what a bear market is. Just because we're experiencing some corrections, which historically happen 7 to 9 times in a bull run anyway, and some temporary weakness in the stock market, and crypto assets, the way they're behaving right now is completely normal in a bull market anyway. I mean, just look at the data historically. It's just a different timeline. So we're not in a bear market. A bear market would basically mean that we have already had the boom. The market has already overheated and topped out, and that hasn't happened yet. It would also mean that inflation is starting to rise to the upside and that the Fed will need to start raising rates. We're not at that point yet. In fact, what we're seeing right now is the exact opposite side of the cycle that we're on. So the exact opposite. We're literally about to enter one of, in my opinion, a mega bull run for crypto. And people don't know it yet. They're basically setting the stage, resetting expectations, trying to shake people out. This is what the Fed's big job is to do, okay? And they will intervene. They can go all in, very heavy with big firepower, and this will likely be towards sometime in the middle or the end of the year. We just need that cool down to take place, and that could take a few months, sometimes less. And then you get your altcoin season. Now, it could happen sooner, as I said, or later, but the point is a sequence of events and macro factors have to fall into place, okay? As they're falling into place, you can see that, oh, things are unfolding like they did historically, just like previous cycles. They're only falling into place at different times. That's it. But they're still falling into place. And as long as they are, that's your roadmap right there. So any weakness is what they want to see, basically, before they act. But when they do, the impact will be massive, in my opinion, especially for risk-on assets like stocks and crypto, even though I'm not in the stock market at the moment, only crypto and gold. So, in other words, we're still in a bull market and the best is yet to come. We just need the macro factors to play out as they are. This is just how the economy works. And then the central bankers and the Feds will collude together. Who knows? There could be a black swan event, maybe not. But the point is they need that cover before they step in and start stimulating. And once they do, there will be a lag effect. So it would take time for it to make its way, that money, that liquidity. It would take time to make its way into the markets. That's your bull run, your altcoin season that you have all been waiting for. So prepare accordingly, be strategic. And if you'd like to speak with me or my brother one-on-one, we do one-on-one calls. Just contact us, go to the website, link in the description. And until next time.